Hi all, welcome to Sini's classroom. Myself, Sini Madhavan. In today's class, we are going to discuss the third phase in the formation of a company, and that is capital subscription. As you know, there are four distinct phases in the formation of a company. One is promotion, the second one is registration, the third one is capital subscription, and the fourth one is commencement of business. Having completed the first two stages, a private company or a public company without share capital can commence its business. That is, a private company or a public company without share capital can commence its business soon after they get the Certificate of Incorporation. They needn't go for the third and the fourth phase. But as far as a public company is concerned, they have to undergo two more phases, that is capital subscription as well as commencement of business. So a private company, after getting the Certificate of Incorporation from the ROC, they can commence their business. They can approach they can go for private arrangements, and they can raise funds and capital, and they can commence their business soon after they get the Certificate of Incorporation from ROC. But that is not the case of a public company. A public company with share capital need to undergo two more phases, and that is capital subscription as well as commencement of business. So, as far as a private company is concerned, there is only two phases in the formation of a company, and that is promotion as well as registration. And when we look into public company with share capital, they have to undergo four phases or four stages, that is promotion, registration, capital subscription, and commencement of business. Literally, this commencement of business is not a phase, rather, it is a certificate that is being issued by ROC. After capital subscription, that is the third stage is over, the ROC will be issuing a certificate, and that certificate is known as Certificate of Commencement of Business, as far as a public company with share capital is concerned. But we say it as a phase because, again, after capital subscription, to get that certificate, the company need to deliberately make an attempt to apply towards the ROC to get that certificate. Then only they will be able to commence their business. Okay, so a private company needn't undergo the third and fourth phase soon after the first two phases, that is promotion as well as registration, they can commence their business. But a public company with share capital need to undergo two more phases apart from promotion and incorporation or registration, that is capital subscription and commencement of business. It is only after capital subscription, the third phase, that they will be getting a certificate known as Certificate of Commencement of Business. So in today's class, we will be discussing about the third phase, that is capital subscription. Capital subscription. Capital subscription is a third stage in the formation of a company. And this is applicable, and this particular stage is applicable only towards the public company with share capital. Capital subscription is nothing but inviting the public to opt for the shares and debentures offered by the company, thereby raising capital from them. As you know, if it is a private company or a public company or an OPC, every type of company requires capital to undertake its business activities. Capital, or we call it as a finance or fund or money, is an inevitable resource as far as any type of company is concerned. But in the case of a private company, they cannot issue prospectus and invite the public to invest in towards their company or to invite the public to subscribe towards their shares or debentures. They are completely restricted by the law. But that is not the case of a public company. They enjoy such benefit, that is, they can raise capital from public. So a private company need to make for private arrangement. They have to take money from their own pocket, or they have to approach financial institutions, banks, and they have to find out other sources from which they can raise capital. That is not in the case of a public company. Public company, again, they can enjoy from financial institutions, banks, they can take from their own pocket, as well as they can approach the public to invest in towards their company, thereby finding out capital. And so this particular stage, that is a third phase, capital subscription, is meant for public companies with share capital. So here, capital subscription means inviting the public to subscribe towards the company's shares or debentures, thereby raising capital for an organization. That is why I said this is meant only for public company with share capital. So in this particular phase, the public company is making all effort to invite public to contribute towards their company, to invest in towards their company, or to subscribe the shares and debentures of the company, and thereby raising capital for the organization. That is all about capital subscription. That is a third phase. But when I say that is all about capital subscription, there are few more steps involved that we need to take into consideration while we are going for capital subscription. So here we will discuss the steps involved in capital subscription. I hope the concept is clear. Capital subscription is nothing but inviting the public to subscribe towards the shares and debentures of a company. And this facility cannot be enjoyed by the private company. That is what I said earlier. That is, after the first two phases, a private company can commence its business. And as far as a public company is concerned, they have to undergo two more phases. And that is the third phase is capital subscription. So here, the public company is making all effort to issue prospectus and invite the public to subscribe towards the shares and debentures of the company. They will be issuing a document known as prospectus. And through this prospectus, the company's activities, their objective, their scope, and everything will be known to the public. And based on that prospectus or the information stated in the prospectus, the public will be subscribing towards the shares or debentures of the company, thereby raising capital for a public company. Is that clear? Hence, a public company can raise capital from the general public, or they can raise fund from the general public. And the fund or the capital can be raised from the general public by inviting deposits, as well as inviting offers to purchase the shares and debentures of the company. For inviting deposits as well as inviting the public to purchase the shares and debentures, the company will be issuing a document known as prospectus. Thereby, they will be raising capital for the organization. So that is a stage known as the capital subscription. Again, this particular stage involves certain steps. That is, the capital subscription stage involves some steps. We will be discussing about the same in this present session. The steps are, the first one is to get the approval from SEBI. SEBI means Securities Exchange Board of India, which is a regulatory body that regulates, or an authority which regulates the capital market movement in our country. So we need to get the approval from SEBI in order to invite the public to subscribe towards our shares and debentures. And the second one is filing a prospectus. It is through this prospectus or the document that the public will be attracted towards our company. They will be ready to deposit or invest in our company or purchase our shares or debentures. So the second step is to, in the capital subscription stage, is to file prospectus. The third one is appointment of bankers, brokers, as well as underwriters by the company. And these people will be helping the company in capital subscription. We will discuss it later. So that is the third stage or the third step. The next one is ensuring minimum subscription. That is, every company need to get in order to ensure that the company is having adequate capital, it need to be ensured that they get a minimum subscription. Minimum number of capital is being subscribed by the public. So that is the next step. The next one is application towards a stock exchange to get our securities listed in a stock exchange. Then the last one is allotment of shares. That is, the purchased shares should be allotted to the different parties concerned or the general public. So these are the steps that is involved in capital subscription. So when we complete all these steps, we can say that the third stage is over and we can move towards the fourth stage. Now we will discuss the steps involved in capital subscription. The first step is getting approval from Securities and Exchange Board of India, SEBI. So Securities and Exchange Board of India is a regulatory body or a regulatory authority which regulates the movement of capital market in our country and protect the interest of the investors. So any public company who is inviting the public to subscribe towards its shares and debentures need to get the prior approval of this regulatory body known as SEBI. For the same, they need to disclose the material information about the company towards SEBI. There should not be any concealing of fact. They should not hide any material fact or information about the company towards SEBI. Else, there will be cancellation of their registration. Okay, that is, it is necessary that a public company which is raising fund from the public by inviting or offering their shares and debentures towards the public need to inform all the material information about the company towards the SEBI and get their approval before capital subscription. So the first and foremost step is to get approval from SEBI. I'm not going to detail regarding what are the guidelines because SEBI has issued many guidelines regarding capital subscription. So here you just need to understand a public company in order to raise capital need to get the approval from Securities and Exchange Board of India. And they are not supposed to conceal or hide any material information regarding the company, else the registration will be cancelled. They have to submit all the information or they have to undergo all the guidelines provided by SEBI. They have to give away all the material information pertaining towards the company. They have to disclose everything towards SEBI because SEBI is a regulatory body which regulates what? All such activities, who will be protecting the interest of the investors. Because there are chances that companies might come with misleading statements or misstatements because they want to raise capital from the public. So such activities are strictly checked by such a regulatory authority. For the same, we have to get the prior approval. Is it clear? So the first step involved in capital subscription is to get the approval from Securities and Exchange Board of India, who is a regulatory authority who protects the interest of the investors. And the public company who is inviting the general public to purchase their shares or debentures need to disclose all the material information of the company and give away all the information towards the regulatory body known as SEBI. Any means by which we are not disclosing the information or we are concealing the information or we are hiding the information, it will be subject to cancellation of our registration. Okay, so the first step or the first movement that we need to take is to get the approval from SEBI. Now, the second step in the capital subscription stage is to file a prospectus or issue a prospectus. Before issuing, we have to file it with the ROC. Now, coming to what is prospectus. Prospectus is nothing but a document, a notice, a circular, or an advertisement which invites public to subscribe towards the company's shares or debentures. So it's a means of advertisement or a document which is attracting the public towards our company to invest or to purchase the shares or debentures of our company. So it is through this prospectus that an individual or general public make a decision that we are going to invest in the company or we are going to purchase the shares or debentures of the company. So prospectus is a document or a circular, a notice or an advertisement which invites the public to subscribe towards the or purchase the shares or debentures of the company. It is through the prospectus that we are informing the general public about our company. Again, the prospectus, this particular document or what you call it as the circular or notice or advertisement, gives the general information of the company towards the public. It is based on this information that the public will be taking a decision with regard to whether to purchase the shares or debentures of the company. So they will be making their mind whether to invest into the company based on the prospectus. And this prospectus contains even this financial soundness of the company. It contains the objective, the very existence of the company, what are the activities of the company. Even the financial soundness is depicted through this particular document. And the public who wish to invest in towards that company or to purchase the shares or debentures of the company, they will be going through the prospectus and they will be making their mind to whether to purchase that shares or debentures. So in the second step, after getting the approval from SEBI, the company need to file the prospectus with the ROC. It is through this prospectus that the general public will be taking a decision whether to purchase the shares or debentures of the company. So, filing of prospectus with the ROC is a must. It's compulsory. That is the prospectus created by the company or the document or what we call it as a circular, notice or advertisement need to be submitted with the ROC. That is the registrar of companies. So the public company have to prepare the prospectus and file it with the registrar. If the registrar gave approval, we have to issue that prospectus. And when this prospectus is read by the general public, they will be taking a decision or they will be making their mind whether to invest or whether to purchase the shares or debentures of the company. So that is the second step involved in capital subscription, that is filing of prospectus. The third step in capital subscription is appointment of bankers, brokers, as well as underwriters. That is, as you know, after the second phase, when we get the approval of ROC regarding our prospectus, we will be issuing the prospectus towards the public. The public, the general public will be going through the prospectus, and if they are impressed by that particular document, they will be investing in our shares as well as debentures. Isn't it? If they are impressed by that prospectus, if they are satisfied with it, or if they find that the company is financially sound or that company is having good prospect in future, they will be investing in our company or they will be ready to purchase the shares or debentures of our company. Isn't it? Again, for the same, they will be giving an application. That is, to purchase our shares or debentures, they will be giving an application along with the application money. That is the money for which they are subscribing the shares or debentures. For collecting these applications and money, we need to appoint a banker. So banker, because all these people, the general public, what we are saying about, are located at different geographical territories, isn't it? So to obtain these applications from all these people and getting the application money or the money that they are ready to invest in our company, again we need a banker. For the same, we will be appointing a banker. So the banker will be appointed to receive and collect this application as well as application money. That is the next step, that is appointment of bankers. So the bankers will be taking necessary step to receive and deposit the application money in favor of the public company. Okay, so appointment of bankers. The next is appointment of brokers. As the name itself suggests, brokers are agents who again help us to sell our shares or to inform the public regarding such an initial public offering. These people are having greater influence on investors. So we can seek the help of brokers to sell our shares as well as debentures. So the brokers are appointed to sell the shares by distributing the forms and encouraging the public to subscribe towards the shares and debentures of the company. For the same, they will be, for such a service, they will be taking commission or a brokerage fees. Okay, so we will be appointing a broker who will be helping us to sell these securities and debentures towards the public. They will be informing the public that such an initial public offering is coming. That is, so and so company is offering their shares and debentures. And they will be passing on this information among their community. Or the community I mean here is the investors, the prospective investors. So they will be passing on such messages. They will be giving away the application. And such a service can be availed from the brokers if the company is finding it difficult to approach the general public. Is it clear? So here the public company will be appointing a banker who will be receiving the application, in favor of the company. Then they will be appointing a broker who will be selling the securities as well as, that is, the shares and debentures among the public. And the third one is appointment of an underwriter. Underwriter is a person who guarantees us that if the public did not subscribe towards our shares or debentures, they will purchase our shares or debentures. So it is the activity is known as underwriting, and the underwriting is nothing but giving a guarantee. It's a contract which is entered between the company as well as the underwriters. So underwriter is the person who gives away such a guarantee, and the guarantee says that if the public did not subscribe towards the shares and debentures of the company, they will purchase the same. Such a guarantee is given by the underwriters. This happens in the case of a company which is going for capital subscription for the first time, and they are not confident enough that the public will purchase their entire shares and debentures. In such cases, they will be appointing underwriters. It is not a compulsory activity, okay? That is, appointing an underwriter is not compulsory. We are appointing an underwriter in circumstances where we feel that the public might not subscribe to our shares or debentures. If they have such a feeling, they can appoint an underwriter, and underwriters are financial institutions who give a guarantee towards a company that they will purchase the shares and debentures if it is not subscribed by the public. The next step involved in capital subscription is ensuring minimum subscription. In order to prevent companies to start their business activities with inadequate capital resources, it is provided that the company need to get minimum subscription. That is, adequate number of application for shares and debentures, or minimum number of application for shares and debentures. That should be ensured. So minimum subscription is nothing but the minimum amount of money to be collected by the company from the public when they go for capital subscription. So when we are inviting public to invest into or to buy the shares or debentures of our company, we need to get a minimum number of application. Otherwise, the public company cannot go for allotment of shares. Without receiving the minimum number of application, they cannot go for allotment of shares. Is it clear? So we should ensure that we get a minimum number of application for subscribing the shares and debentures. That is known as minimum subscription. The limit of minimum subscription is 90% of the size of issue. For instance, if my company is issuing 100 shares, I should get at least 90 application. That is, 90 applications should be received for subscribing towards the shares or debentures of the company. So the limit of minimum subscription is 90% of the size of the issue. Without getting that 90 application, I cannot go for allotting the shares. That is the next step, allotment of shares. So in order to allot shares among the public, I need to get a minimum subscription. That is the minimum number of application towards the shares or debentures of the company. And that limit is of minimum subscription is 90% of the size of the issue. And the company must receive this particular amount, the application amount, within 120 days of issue of prospectus. If I'm issuing the prospectus today, from today, within 120 days, I need to get the application money. That is the 90% the size of the issue should be received within 120 days of the issue of prospectus. Otherwise, if I didn't get the minimum subscription, I have to return back all the application money towards the public. So whatever I have collected as application money, I have to return back to them. Is that clear? So, in minimum subscription means the minimum amount of money that need to be collected by the company from the public in the form of capital subscription or by capital subscription. That the minimum number of share application that we need to receive from the public is known as minimum subscription. Without getting minimum subscription, we cannot move towards allotment of shares. If we didn't get if the application received is less than 90%, then we have to return back all the application along with the application money. We cannot allot the shares. So that is the another step involved in capital subscription, that is minimum subscription, ensuring minimum subscription from the public. The fifth step in the capital subscription stage is application to stock exchange. That is, if a public company is offering shares and debentures towards the general public, they can do it only if it is being listed in a recognized stock exchange. For the same, the public company needs to give an application towards the stock exchange to get their name listed. The stock exchange, after making all the verification and finding that the aspects given by the company is true and they are satisfied with the financial soundness of the company, then they will be listing the name of the company in their stock exchange. Okay, so a company can apply towards any recognized stock exchange to get them listed. Only a listed security can be offered towards the public. Any allotment made towards the public without listing the securities in a stock exchange will be regarded as void. That will not be accepted. In such cases, such allotment is regarded as void and we need to return back the entire application, the application amount collected from the general public. So it is a compulsory step, that is to get the securities listed in a recognized stock exchange. So a firm must get itself registered or listed in a recognized stock exchange, then only they can sell their securities towards the general public. It is a compulsory stage or a compulsory step that need to be undertaken by a public company, wherein they have to give an application towards the recognized stock exchange. The stock exchange will be verifying all the documents, all the aspects of the company, even the financial soundness of the company. Then if they are satisfied, they will be listing the name in the recognized stock exchange. Only then they will be able to issue shares towards or debentures towards the public. Any allotment made without getting their name listed in the recognized stock exchange will be regarded as void. Is that clear? So the fifth step is to give an application towards the recognized stock exchange to get their securities listed. The last step in capital subscription stage is allotment of shares. So once we got our securities listed in a recognized stock exchange or the name of a company listed in a recognized stock exchange, the next step and the last step is to allot the shares. So we got a minimum subscription, we have made all the necessary steps for capital subscription, then the last step is nothing but to allot the shares towards the successful allottees. Okay, so here the company need to prepare a return of allotment. Again, return of allotment means an allotment letter or a statement which gives the entire picture about the subscribers of the shares and debentures, the name of the subscribers as well as their address, and the number of shares held by them in our company. So all these details will be prepared, the return of allotment statement will be prepared, and that need to be submitted with the ROC. Okay, then the ROC will be receiving this details after the successful completion of capital subscription. So here in the last step, we will be allotting shares towards the successful allottees or the people who has subscribed towards the shares or debentures. A letter of allotment will be sent towards them, stating the name of the people who are subscribed towards the shares or debentures, the number of shares held by them, their address, and so on. So in this step, a return of allotment is prepared by the company and the same will be submitted towards the ROC stating the name, address as well as the number of shares allotted to each shareholders or the people who are subscribed towards the shares or debentures of the company. So these are the steps involved in capital subscription stage. That is the third stage in the formation of a company, and this particular stage is applicable to only public company with share capital. That is public company which is raising share from the general public. That phase is known as capital subscription. So in capital subscription phase, the public company is inviting the general public to subscribe the shares and debentures of the company. Again, it involves certain steps. The first step is to get the approval from Securities and Exchange Board of India. Then the second one is filing prospectus. The third one is appointment of bankers, brokers as well as underwriters. The next step is to ensure minimum subscription. The next one is getting the company listed in a recognized stock exchange. And the last one is when all these activities are over, successfully completed, all the steps are successfully completed, the last step is to allot the shares among the shareholders. That is the people who are subscribed towards the shares and debentures of the company. These are the steps involved in capital subscription. So once the capital subscription stage is over, successfully completed, we can move towards the fourth phase wherein we are going to give an application towards the ROC to get a certificate of commencement of business. So in this class, we have discussed about the third phase in the formation of a company, that is capital subscription. In the next class, we will learn the fourth stage, that is commencement of business, the certificate of commencement of business, or obtaining the certificate of commencement of business. I hope the concept is very clear.